right, it's the 4th of April. It's a Friday. It's NFP today. We'll get to the charts in a second. We've got about just under 30 minutes to the NY Open. Yeah. Okay. All right. So start with the calendar. Yeah, we've got NFP in about 56 minutes from now, right? We've got NFP, almost an hour. So we're going to be waiting for NFP, not going to be opening any trades before that. This week has been a testing week because it was slow on Monday, Tuesday, Wednesday. Yesterday there was a massive move without any pullbacks, just a push down, then a push back up without any pullbacks. So there was no trades taken. And today we've got NFP, so hopefully we'll be able to get a trade today. Let's see. We'll draw our zones and then we'll wait at our zones to see if we get a trade. Okay, let's start. The weekly has flipped bullish again, right? So yesterday, for a brief period, it flipped bearish, created a bottom wick because there was hardly any wick on the weekly candle, created a bottom wick, and now we are pushing back bullish because that's the trend. Right? It's a very bullish trend. We're probably heading towards 3150 again, right? And if we have volume, enough volume, then we could go close. The daily candle could close either at it or past it. Now, it's kind of hard to judge the end of week trade today. We usually do this. I usually do this when it's a weekly, the end of the week. We kind of predict how the weekly candle will close, and then based off that weekly prediction, we predict how the daily candle would need to close for the weekly candle to close in a certain way, and then look for a session trade in the NY session so that the daily candle closes the way we predicted, right? That's what we usually do. But today is NFP, so any analysis can be tossed out of the window because it's tough to predict NFP. All we can do is draw our zones, draw liquidity levels, and see if price gets to those areas and we get any sort of a lower time frame confirmation at those areas to take trades, right? That's all we can do. We can't. It's hard to predict how the weekly candle will close. We could close. It could go either way. You could close bullish, or we could flip like we did yesterday and close bearish, right? Either scenario could happen. So it really makes no sense to try to predict the weekly candle on the weekly candle close on NFP, right? That's one day that I stay away from predicting how the weekly candle or the daily candle will close. Let's go down to the daily. So the daily candle closed a doji. So we've been closing almost dojis last 3 days, right? Yesterday we had a massive move, over 1,000 pip move down, and then we retraced about 75% of that move. We retraced it back up, 75-80% of the move. We came all the way back up and we closed here. And we closed a bearish doji, right? The previous one is also, you could consider a bullish doji. It's in the middle of this range, in the middle of 3150 and 3100. That's a 500 pip range. It closed in the middle. And then the one before that is also a bearish doji, right? So we've been closing sideways. So the candles, even though we've had movement, we had movement yesterday, the candle came back and closed back in the range, right? That's all that happened. And today, we're exactly in the same place, in that same range. We've been in that today, considering today, so we've been, the last 4 days, including today, we are in exactly at the same range. The same place in this, if you look at the bodies of this candle, I always say that's the tradable, the bulk of the trading happens inside the body of the candle, right? So if you look at the daily candles, the bulk of the trading happened in a 200 pip range, and price is back in that 200 pip range. That's the range. I've been speaking about this range for the last few days since Tuesday. It's a 200 pip range that we're in, and price is inside that, back again inside that. Now, are we going to break and close above, or are we going to break and close below to continue down? Is the question today. Okay, so let's go to our trading chart and draw the zones. Now, I was anticipating price to for sells. I was waiting for M15 resistance to be created. It was created. Outside stream hours, I wasn't at the chart. I didn't take this trade. It did create, but anyway, even if I did take this, if I looked to take this trade, there was no pullback. This candle didn't pull back to be able to take a trade, right? It just dropped, and then we just ranged after that. So there was no big drop. Later on today, Asian and London session, we continued the drop, but we have come to 3086, and we're pushing back from 3086. That's a weekly support resistance level. Okay. Now, before we draw zones, let's take a look at this area. I think we've got a 3135. Yeah. Hmm. Yeah, 3135. Look at the number of touches on the 4. And we have a daily prices stayed below 3135. I'm going to keep that level there, 3135. It's a temp level for now. We'll take a look at that level next week again, but we're going to mark 3135. That's exactly where price is reacting to right now. Let's take another look at that area. This open was 3134. Yeah, 41. Yeah, 3135 is good. Okay, so we have a new SR level 3135. It's a temp level for now because once price touches it under the daily candle, we have a confirmed touch. Maybe today we touched, and then we're going to, then that'll be a permanent level. Okay, right. So let's start with our zones. Let's get rid of all of this. Okay. Right, there is a base drop here. Price has come through it. We're going to take a closer look at that area. Price has gone through it. We're going to take a look at that area on the 1 hour. Yeah, that's yeah, price has gone through that zone. But We are reacting to it. Let's look at a 30-minute. Yeah, we've gone through that zone. But there's 3135 there. Yeah, we've gone through this zone. We have a rally here and a drop here. Take a look at this zone. Yeah, there is a base there, and price has gone through that. Price has gone through that area, but we haven't closed above, so I'm going to keep that. That's a 1-hour zone. It's visible on the 1-hour. I'm going to keep that level. Okay. Let's put the numbers there. 555 and 539. 39. Okay. It's a lot of volume. So this is the source. Drop, base, drop on the 1-hour. We have a reaction. That's also supply. And now prices come and tapped it again and pushing down. Right? It's a heavy push down. Look at that. Wow. 370 pips. Look at this. These 15-minute candles are 225 pip candles. So on NFP and CPI are 2 days that I trade on the 5-minute time frame. Those are the only 2 days, CPI and because of the amount of volume that comes in. Yesterday maybe should have maybe considered the 5-minute time frame because yesterday also was a high volume day. I didn't think of that. We should have probably traded this bullish engulfing candle. Wow, that candle is 135 pips. The 5-minute candle is 135 pips. Sheesh. That's 139 pips candle. Wow, it's a lot of volume, eh? Okay, just got to be very careful today. Very, very careful today. The markets, there's a lot of tension in the market, a lot of uncertainty. We should be pushing up. Should be pushing up. Okay, let's continue with our zones. There's a 1-hour zone here. This was drawn yesterday. Let's extend that to the right. Let's extend that liquidity candle to the right as well. It's a 4-hour supply zone. This was drawn yesterday. Okay. We should be pushing up. There's a lot of uncertainty in the market. Right, on the 4 hours. There was a rally-based rally here. Price went right through it. But now we have a drop and a rally here. We are reacting to this. This is the source of demand, rally-based rally. Price tapped it here perfectly, 3057 and the liquidity candle, and pushed all the way up yesterday, 780 pips up from that liquidity candle and 3057. Got a liquidity. We got a liquidity area here as well. A weekly SR level 3086 and 3135 here, and 3100 here. Okay, let's take a look at this area here. There is some sort of demand here. That's a liquidity grab. There's a massive liquidity grab from that liquidity candle, 322 pips. Let's take a look at on the 1-hour time frame. Yeah, on the 1-hour time frame, we have a base, a drop, base, rally. Let's just take a better look at that area. That's 142, 167. Yeah, so that is a drop. That's the base. The 30-minute time frame. Yeah, let's do it. Do this. Yeah, that's better. No, I'm going to keep it to the 1 hour. Okay. 615424. Okay. So we've got demand here. This is 4-hour demand because it's visible on the 4-hour, the drop and the rally, but the base is on the 1 hour. So I'm going to keep it as 4-hour demand. I'm just going to bring this down so we don't overlap. This low is 424. It's a 4-hour demand zone. Prices come 24 pips into it. It's a 84 pip zone. Okay. Got a liquidity candle there. We're going to extend the liquidity candle to the right as well. Okay. Right. Those are the new zones, right? There is supply here that has already been tapped, broken. Price should be pushing up, and we have a new demand zone here. We're going to extend these old zones to the right because today is NFP. Price can go, price can move a lot. We got to be ready for it in case it drops to push down or to grab liquidity. 700 pips to the downside. Let's just extend this as well. Yeah, that's good enough. Let's just okay. Next step. Price is reacting to the supply, right? Let's see if this has taken out um, any demand on the way down when price dropped here. Let's go down up to the 30-minute time frame. Nothing. It's not taken out anything. So this is not a high liquidity zone, and price has gone through it, right? So it's not a high liquidity zone. We should be pushing through this. Let's take a look at the zone below, the demand zone. Has this taken out supply? Yes. So this demand has taken out this drop, base, drop. This was the zone. You can see that this high has broken this high. So making this a high liquidity zone. Okay. Okay, so these are the zones, right? Got a demand zone here, a supply zone here that has already been taken out, but price hasn't closed above it. Now we're going to take a look at this area, and I try to identify a high liquidity candle in here. We've already tapped this high liquidity candle. This was on the 15 minute, no, 15 minute, yeah. It's a 15-minute candle. Price tapped it beautifully yesterday and pushed up 775 pips. Okay. All right. On the 1 hour, we have a liquidity grab, right? We have a liquidity grab. So we're going to mark that out. Let's go to the 30 minute. It's this candle right here, 294 pip candle. Let's go to the 15-minute time frame. Yeah, it's this candle right here. 249 pip candle. 5-minute time frame. Yeah, 155 pip candle. One 33, 154. That's a candle. That's a liquidity candle. 535998. Okay. We've already grabbed liquidity. The London session. Pushing up. Okay. Right. Next thing is we're going to identify what, look at what price is done in the Asian and London sessions. Let's do that right now. Yeah, we've come through this. Let's take a look at this area again here. It's the largest candle. I want to identify the candle, even though even though it's probably price has gone through it, still identify the candle here. It's an 81 pip candle. '84. 84. Yeah, that's the candle, 30-minute candle, 130. Yeah, this one is better. 4098, 762. Let's take a look at this on the 5-minute. Yeah, it's clean push down, 94 pip push down, 95. Yeah, 30 minutes is good. So that's the liquidity candle, right? Now it's clear. Price has come up once, twice. We've crossed the 50% mark. That's a 131 pip candle. We've come 80 pips here. We've come another 85 pips here. So we crossed the 51. Third time we come here, we're going to break through. And we're going to head to 3150. Once we come here for the third time, price is going to go up here. Okay. All right. Just save this. Okay, let's take a look at what price has done in the Asian and London sessions. So that's the open. Market open. The market opened at 3115.25 roughly, right? 3115. Hmm. Okay. So in the Asian session, we moved 290 pips. And in the London session, we moved 313 pips, right? 290, 310, roughly. Okay, so what the market has done, let's look at what the market done. So yesterday, we were bearish. There was bearish volume. So price ranged after it came to this weekly SR level 3135 and the liquidity candle. It pushed down, ranged, and continued to push down later on. So created the Asian high, came straight down, created the Asian low, came very close to 3086, pushed back up, created the London high, came here, closed below the Asian low, tapped 3086 and the liquidity candle that it created yesterday. And because of that massive bullish volume yesterday, the liquidity candle that was created that pushed price up over 500 pips, we tapped it and pushed back up, right? We tapped it, pushed back up 500 pips. So same move up, we replicated it on the, and we replicated that move today in the London session. We pushed up 500 pips, right? Now, price went up, tapped 3135. This is pre-NY. Yeah, this is pre-NY. We've tapped 3135 and we're pushing back down. We formed 30-minute resistance. We've closed below the Asian low. If we close below the London high, we close below the Asian high. If we close below the London high, we got another 23 minutes of the candle to close. If we close below the London high, we should push down to the London low. We should push down here, right? We should push down here. Now, what are we doing for NFP? Here's what I'm doing. I'm going to be looking at the 5-minute time frame. 1 second. Okay. So I'm going to be looking to take a trade for NFP at the extremes. That's what I'm going to be doing, right? So what I mean by extremes is either at demand, I'll look to buy, either somewhere here inside this liquidity candle, or at 3086 or 3057, or at this liquidity candle, right? So there are 4 liquidity areas that I can choose from. 3086, the liquidity candle, 3057, and the liquidity candle here, right? This is a old 4-hour demand zone that price tapped yesterday and pushed up 775 pips, right? So those are the 4 areas I'm looking to buy from. If price comes further, then 3050, okay? Yeah. For sells, I'll be looking to sell I don't know about sells. I don't know about sells because this is tapped. And the next time we come, we're going right through. I don't know about sells. I think the move today are buys. The move today could be buys, but for sells to work, let's take a look at this. Price has tapped the liquidity candle already. Doesn't need to create a resistance. If we take a sell here, we're going to come and hit 3100. There are too many barriers for sells. 3100, 3086, liquidity candle. It's too many barriers. Buying is the path of least resistance. Buying today. At least that's what the charts show. Even though the EMAs have crossed and prices, the path of least resistance is buying, because this is a tapped liquidity candle and price can go through it and head to 3150. And that's a big move up if we get that. So I favor buys today, and that's what I'm going to be looking for on the 5-minute time frame. Now this candle has no bottom wick. This candle has no bottom wick, so we could come down. We could come down, continue down, and then push up later on. What numbers are they expecting? They're expecting bad numbers. Expecting low jobs to have been created last month. Yeah, even if we get good numbers, the technicals don't really support a move down. It can move down, but there's a lot of risk. There's a lot of areas where price is gonna have to struggle to get through. 3086, the liquidity candle, 3057, the liquidity candle, 3050, for price to come to make a move down, 300-400 pip move down. I think we're going to get a push up from here. Yeah. Okay. We'll have to wait and see. 15-minute candle is about to close. We're closing bearish, closing below 3130. We've retraced, we pushed up. London session, we pushed up 580 pips. We've retraced the entire move. We're almost retracing the entire move down. If price comes down and you get a bullish close above, a 15-minute bull candle close above the London low, price is going to be pushing back up. You have clean space to the left if price is to push up. If we're coming down, we're coming to 3057 again. It's a 350 pip drop. And to do that, prices to get through all of this. So it's a tall order, very tall order. That's a 150 pip liquidity candle. Prices come 67 pips into it. So there is liquidity left in that. All the way down here to the start of the candle. It's easier for price to push up than it is for price to push down. Okay. Yeah. So we're waiting. About 11 minutes for news. Um, let's take a look at this again. Price is likely to come back into this range. Okay. This is that 200 pip range that we've been talking about since Tuesday. Tuesday, Wednesday, we spoke about this. Price is likely to come back into this range. We are possibly pushing down for a liquidity grab. That's I'm just going to start looking at this very objectively and try to make a calculated guess of what could happen in during NFP. Okay. So on the daily time frame, we created a range here. Now these areas are very attractive to price, right? So it's likely that we're going to come back here. So which means price has to push up, right? To come back here. Because during a high, during a very important news event, what price needs is to come back to liquidity. That's what it needs, right? So this is a area, a tested area, heavily tested area of liquidity. Price is very likely to come back to it. That's 150, 150, 160, 170 push up if price comes there now. But we still have about 8.5 minutes. Okay, so if you come further down, then the push up should be even more, right? So it's likely that price comes back to that range, this 200 pip range that we've been talking about, right? This whole week, price comes back there. Now, that's if price needs to do that, then it is likely to grab liquidity and push up. And there are a lot of areas for price to do that. We've got a weekly SR level 3086, we've got a liquidity candle, we've got another weekly SR level 3057 and another liquidity candle, and then we have 3050. There are plenty of areas to grab liquidity for price to come back to this range. Right? This range starts around 3113. Let's put up a level there, 3113. 313. Right? That's the area that price is likely to come back to. And if it comes up, volume could push it back to this liquidity candle. And because this liquidity candle has been heavily tested, we could go right through it back to 3150, right? For price to push down, if price is to push down, it's going to come down. It needs to come down to fill this wick. It's a 500 plus 550 pip wick, right? It could push down. That's the other scenario. That's a second scenario where price pushes down to fill the wick. For that to happen, price has already grabbed liquidity from the liquidity candle in pre-NY and from the weekly SR level. It has to go through all of this. It's got to go through 3100. It's got to go through 3086, the liquidity candle, 3057, and the next liquidity candle. Yeah, to come to 3057, it's got to go through 1, 2, and then get here, which is also possible. Price can push down because we've grabbed liquidity. It can push down. And then later on, push back up. Okay? So sells are possible and buys are also possible. That's what I'm seeing here. Sells are possible for price to come down here because it just needs to get through these two, this weekly SR level and this liquidity candle. Once we break this, we're dropping straight another 125, 130 pips to 3057. Once we break this low, this liquidity candle low, we're dropping another 130 pips to 3057. So there's just two liquidity areas to get through to come here. And then price can push back up through all of this because this liquidity candle is taken out and price can easily push back all the way up back to this range. Back to this range. That'll be a 500 pip move up back to the range. Back to 3113. So sells are possible and buys are possible, right? So that's what I have visualized. So therefore, I'm going to wait. I'm not going to take sells here. I'm not going to do that. I'm going to possibly wait for price to drop and then look for the buys. I'm going to wait for price to drop and then look for the buys. That's what I'm going to do. Got another 4.5 minutes for news. And I'm going to be looking at the 5-minute time frame today, right? There are two news events. And the reason for that is because of the high volume, right? That's anticipated. Now, we could get high volume, we could not get high volume, right? But we anticipate there are two news events in the month, CPI and NFP. Now, yesterday also was a very high volume day, and maybe I should have looked at the 5-minute instead of the 15-minute time frame. Because if we look for 5-minute support to be created instead of 15-minute support, for a 5-minute support resistance to be created instead of 15-minute support resistance, that's perfect. We came, tapped the liquidity candle, created 5-minute support, excellent trade up. Price went up, tapped the liquidity candle, created 5-minute resistance. That's a tradable 5-minute candle. A nice push down, right? So that's the difference between high volume days and normal days. So yesterday was exceptional. It was a major new global news event that happened on the second night NYEST. So the market reacted to it yesterday on the 3rd of April. So today it's NFP. I'm going to be looking at the 5-minute chart. These are the only two news events. NFP and CPI are the only two news events. I look at the 5-minute chart. I wait for 5-minute support or resistance to be created. So yeah, I'm going to be waiting. So prices pushed up here. We've created resistance. We grabbed liquidity in the London session. We are closed below the London high. We should be pushing easily down to the Asian low and then the London low. Should push here easy. But I'm not going to be taking any sells because I want to trade at the extreme, especially on a day like today. And also because I'm looking at the 5-minute chart, I don't want to trade in the middle here. I don't want to take sells here in the middle. Even though price could drop all the way down, I don't want to take trades in the middle. I want to take it at one of these extremes. Here, sells up here, buys down here. That's a doji. It's a nothing candle. There is no information on this candle. It's a doji on the 1 hour. So massive wick. It's wick on both sides. It's a doji. It really doesn't. This is not a liquidity grab. This is a liquidity grab. You can see the difference. Even though this candle has a big top wick, this is not a liquidity grab. This one is. You can see grab liquidity, huge wick, good body, push up, and continued up. This is not a liquidity grab. On the 1 hour, this is not a liquid. This on the 1 hour is a liquidity grab. From down to push all the way up. This is not. On the 4 hour, we still have an hour and a half for the 4 hour candle to close. This 4 hour candle has no bottom wick. So we are going to break below this. We are going to turn bearish. We're going to come into this wick that we created yesterday. This 4 hour wick, price is going to come into this wick. Right? That's what's going to happen. Price is going to push down, break its own low, and come to fill this wick. Right? But I'm not going to take any sells here. 30-minute resistance is formed. Yeah, I'm not taking sells here because there is no M15 high breaks either. Look at the 5-minute. The 5-minute, we have this. No, I'm not going to take sells here. No, I'm going to be waiting for the extremes. It's got. Now this is news. Let's see what happens. Let's see what happens. Let's look at the 5-minute time frame. So we created 30-minute resistance. The candle has closed below. We should be pushing down. Let's wait for the 5-minute candle to close. Yeah, we broke the low. We should flip bearish. Might take a sell here. Yeah, take a sell here. Stop loss there. Above this 5-minute candle. Yeah, around here, 140 pips. Stop loss there, above this 5-minute candle. Because we tapped 3100, 30-minute candle closed below the London high. It should push down. It should push down. Once we break this low, we should continue down. So low is 836. Once we break the low, we should go down. 3082 is where I'm waiting for, 3082. Because we have, like, yeah, 30-minute. Yeah, below this low. There is no bottom wick on this candle. We should break this low and push down. Let's see if we can get there. It's no volume. NFP, no volume. 85. 85. So we are going pushing down. Let's see. $3086 is there. That's the only issue. If we can push past that, then we are going to 3082. Need a quick push past it. Yeah, there we go. Trying to push back up. Yeah, there we go. That was the push down. Perfect. 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 I hope you guys took that trade. Perfect. 3082 entered somewhere here. That's about 175 pip move. Yeah, perfect. Nice. And it's doing exactly what we said it would do. Price is pushing down. Right? Price is pushing down. So the two price, I said both can work out today. Both sells and buys. I said that, right? Price has grabbed liquidity. Right? Does not need to come back. It's grabbed liquidity in the London session. From the liquidity candle, it's pushing down. But price is attracted, I said this, price is attracted to this range here. And we put a line there, 3113. It needs to, it's very likely going to come back there. But before it does that, it's very likely going to come all the way down. And that's exactly what's happening. It's coming through this liquidity candle now. Now there is volume. Now we're pushing through. That was nice. It's nice to see when analysis pays off. When I hope you guys took that trade. There was plenty of time after I entered. There was plenty of time for you guys to get in on that trade, even though there is I think about a 7-second lag on YouTube. If you did take that trade, just give me a thumbs up in the chat. If you did take that trade, we're pushing down now. We're coming down, right? We spoke about this price is going to come down to 3057. That's probably what's going to happen. It's trying to come down to fill the wick. That's nice, Philip. I'm glad you got the trade. Glad you took the trade. Did the analysis make sense? What I said, was it clear? Were you confident? Were you confident in taking the trade? Did it make sense what I said? If you have any questions, if anyone has any questions on anything that I've said so far, please, you can drop a question in the chat, and I'll do my best to answer. Now, price can push up, right? We spoke about this. Price can push up, right? Now, if you had a win, okay, great, Philip. So if you had a win, then and you still want to continue to trade, that's okay, but reduce your risk so that you don't give away all your profits. But if you say, okay, that's enough, I had my win, it's the end of the week, I got a trade, I'm done, then that's fine too, right? Don't try to force trades, right? But the analysis is that price could push up, right? And there are a few reasons for that. I said the path of least resistance is for price to go up. That's number one, right? The path of least resistance is for price to head back up, right? Because going up, there are not too many barriers. We have a heavily tested liquidity candle, right? So I said when price comes back here, it's going to go right through it. Okay, we've got 3100. 3100 is the only barrier standing in the way of price, right? Now we've got a 5-minute candle forming here. I'm personally not going to take, I'm not going to take any more trades, but if you follow the analysis and if you think the analysis makes sense, I have the confidence in taking a trade, then you can do that, right? Just reduce your risk and don't over risk, don't over trade, just be careful. It's a Friday and it's NFP. Okay, so the path of least resistance is for price to push up. The only barrier price has is 3100, right? Let me get rid of this. Right, 3100 is the only barrier that price has. For price to push down, continue down, not push down, but continue down today, continue, right? That means for price to continue throughout the session, to continue down today. Okay, we've got a 5-minute candle close, right? You can take a buy here because it's from the liquidity candle, and from 3086 you can take a buy here. Okay, your stop loss would be have to be under that, but reduce your risk if you are taking. Reduce your risk, right? Don't take your full risk, and don't give away all your profits back to the market. Okay, your TP level, your stop loss would be under here. Your TPs would be up here again. 3127, 3135, and then 3149, right? 3127, 3135, 3149. Those are TP levels, right, for buys. Okay, so going back to what I was saying, the path of least resistance is for price to push up. Point number two, price is attracted to these to ranges, to a heavy range like this, price is attracted to those ranges. So price is very likely to come back up to this range. Okay, that's the second point. Point number three, if price is to continue down for the rest of the day, it has to get through, it has to not just get through, it has to close below. 15-minute and 30-minute candles has to close below 3086, below the liquidity candle, below 3057, below this liquidity candle, and below 3050. That's a tall order, right? 15-minute, 30-minute, if price is to continue bearish for the rest of the day, it can, but it has to start closing 30-minute candles below all of these liquidity levels. That's a lot to do, right? It's far easier for price to push up, far easier, okay? So that's the analysis, right? Now, we took sells here when price tapped. I said we're going to look at the 5-minute time frame. There are 2 days of the month that I look at the 5-minute time frame. That's on NFP and CPI, right? So 30-minute resistance is already formed. You're not going to get M15 high breaks. If you use the same model that I use, the 15-minute fib model, you're not going to get that on NFP and CPI, right? You can, but it's better to look at the 5-minute time frame. So if you go down, if you all you need to see is 30-minute resistance form. We have clear 30-minute resistance form, and I said wait for the candle, 30-minute candle to close below the London high. Once we close below the London high, we're pushing down to the London low, and that's exactly where price came down to. So if you go down to the 5-minute instead of the 15-minute, you go down to the 5-minute now, and you look for the previous two M15 breaks, the M5 breaks. This candle broke this side, this candle broke this side. And that's why I drew this, right? And then price came, tapped 3100, rejected it. I entered here, and we came to the London low, right? That's exactly, that was almost a 200 pip move, and I got about 180, I think 180, 170, 180 pips out of that, right? And we're still pushing down. Now be careful, okay? Just be careful, because price is still kind of bearish. Price is still trying to push down, so just be careful. If you have taken a trade and you don't want to take any more trades, then that's fine. Just call it a day. That's better. That's even better, right? You got your win. You're done. Don't try to take any more trades. But use this, maybe the analysis, as education. Use it as education, and yeah, use it as education, and see if the idea plays out the way we discussed. Yeah, I'm not going to be here until NYC Open. It's a Friday. I want to end the stream a little early today, maybe in about 5-10 minutes. I'm not going to give out, I've already given out the ideas. I'm not going to give out any further ideas. I've given out the analysis, clear analysis, right? So if you are taking, if you're looking to take buys today, within the next 1 to 2 hours, so from now to a max of 2 hours, if you're looking to take buys, then your I'll put in the TP levels. I'll put where your TP level should be. Yeah. So for buys, if buys are to work out, This 5-minute candle price is still bearish. We have a bull candle, but price is still trying to push down. Okay. So you know how I draw the fib. This is how I draw the fib. And I'm drawing on the 5-minute time frame. I don't do this on any other day, right? It's only on CPI and NFP that I use the 5-minute, right? So if you enter here, your stop loss would be about 48 pips. You're anticipating a push up here, right? About a 500 pip move up, but price can come down. I said, you can keep in mind, you can come down to fill the wick and then push up, okay? So if you feel that no, I'm not going to take the 5-minute support, I'm going to wait for 15 minutes support today, then that's fine too. 5 or 15 is good for NFP CPI. 5 or 15, right? On any other day, I always recommend to wait for 30-minute support or resistance to form, unless price is trending heavily and far away from the EMAs. That's when you know that price is as a strong uptrend or downtrend. Like for example, when price is pushing down very much away from the EMAs like this, that's when you wait for 15-minute support or resistance to be formed. But on days like NFP and CPI and like yesterday, the 5-minute support or resistance is good. I would wait. I would wait before you take the buys. I would just wait. Let let the 30-minute candle close. They're still trying to come and fill this, right? We're coming to the trying to come get to the bottom here. So just wait. I said that price is very likely. I said for sells, price is going to come down to fill this wick very likely. Those were I gave two scenarios. I said two plays today. Price is very likely going to come to fill the wick, and then we're going to get a push up, possible push up. Then after we fill the wick. So wait, be patient. This is the wick. The wick ends at around 3057, and this is where it ends. This is here, 3057, where the next liquidity candle is. The if you look at the 5-minute candles since yesterday, since April 2nd, since the news came out, just look at these 5-minute candles. These are the 5-minute candles are averaging 150 pips, not 15. 5-minute candles. Look at that 5-minute candle. Look at this one. 180, 86 pips. Look at this one. 149 pips. 171, 72 pips. 127 pips. 5-minute candles are averaging 150 pips. So that just means that your stop loss is going to be wide. But if you trade it correctly at the extremes, then price is going to hit, then your TP also will be good. Like we got 170 to 200 pips just in like a few minutes, probably in about a couple, 2 to 3 minutes, right? Yeah, in about 5 minutes we got a price pushed down 200 pips in like 5 minutes. Yeah, 174 pips, 175 here. We're coming down. We're still coming down. No bottom wick. No bottom wick. So very likely going to come down here. All right, that's going to be the end of the stream. Yeah. So if you're going to be watching the chart, price should break below this. Yeah, we should break below this, and once we get here, we should have a push up price to push up. Okay. Yeah. Anywhere here, either from here or just above, we should get the push up. But wait for the 30-minute candle is just going to close. The next one should break the low, continue down to break this low. Then after that, wait. You can wait for 15-minute support to form. That's fine. You can wait for 15-minute support and then draw the fib and take the trade. If you are trading, if you're not, if you're done, then call it a day and come back to the charts on Monday. Next week we have CPI. Yeah, 1 second. Yeah. Next week we've got CPI and PPI. Should have decent volume. On Monday, Tuesday there is nothing, and another reason why we should be having volume is because of these tariffs, right? Now countries are responding back. It's probably going to go back and forth. We spoke about this last week, and this is probably going to there's going to be a lot of uncertainty in the market, and the markets are going to be volatile for the foreseeable future. I mean, at least for another few, maybe several weeks to probably a few months, we're going to have a lot of volatility, right? So it's best to reduce your risk trading the next few weeks, right? Because of the amount of uncertainty in the markets, and yeah, it just the 5-minute time frame tells you that you should reduce risk. Just the 5-minute time frame, what I just explained. The 5-minute candles are averaging 150 pips, right? That tells you need to reduce risk because you don't want to you don't want to have a 200 pip stop loss and have that stop loss hit. Okay, so the 5-minute time frame just tells you that you need to be reducing risk. Look at this 5-minute candle, 158 pips, right? This is volume hours, and look at how big these 5-minute candles are. Just this week on Monday, Tuesday, Wednesday, 15-minute candles were struggling to reach 40 pips, 45 pips. We've had 15-minute candles that were 20 pips and under. Now we have 150 pip 5-minute candles. So that just tells you it's a very simple message. Reduce your risk over the next few days or next few probably a week or two. Reduce your risk, cut down your risk, because you can't over risk manage, right? You can't aggressively risk manage. You can to a certain extent, but you have to wait for candles to close. You have to wait for M15 and M30 candles. But if 5-minute candles are 150 pips, then your M15 candles are going to be, that's an M15 candle. 300 pip candle, 305 pip candle, that's an M15 candle. 200 pip candle, 127 pips. 200 pips, right? So you have to wait if you are managing risk based. You have to manage risk. If you're a session trader, you got to manage your risk based off the 15-minute and 30-minute. You can't base it off the 5-minute, right? That's too. That's a not the 5-minute time frame is a too volatile a time frame to manage risk on. You need to be doing it on the 15 and the 30-minute. So you got to wait for a 15-minute high to be broken or a 30-minute high to be broken if you're going to manage risk on sells, right? So are you going to be holding drawdown for 200 pips? You need to reduce your risk, right? You will have to hold drawdown to a certain extent. So the only way to keep those negative drawdown to a minimum is to manage risk, to keep your risk really small. So probably half your risk if you're trading, let's say 1%, then cut it down to 0.5%. If you're trading 2% on each trade, cut it down to 1%. That's my advice for the next few days, even maybe the next couple of weeks, until the dust settles of this tariff news. And then once we start seeing 15-minute candles that are 50 pip, 60 pip candles, you can get back to your normal risk, right? That's my advice for how to manage risk in when there's global uncertainty in the markets. All right. So back again on Monday, 7:30 a.m. EST. Stay safe. Don't overtrade. Don't over risk. It's a Friday. We'll be back on Monday. Take care. Have a great weekend.